Hello everyone, my name's Keith Ruxton from Kinetik Training, and this is a short introduction to BankWorld. Now, BankWorld is the banking risk simulator that you'll all be playing shortly, and my goal in this video is just to take you through some of the basics of the simulator, how it works, and a few little tips of things to be thinking about as you are playing the game. The first thing I wanted to mention was some of the learning outcomes that BankWorld will give you that are quite difficult to achieve through other learning methods. So first of all, this is a full balance sheet simulation. In other words, you're running the whole of the bank, the asset side, liability side, mortgages, deposits, making interest rate decisions, lending decisions, etc. Secondly, you'll witness how the underlying economy impacts the result of the bank. What happens when GDP goes down? What happens if interest rates rise? You'll get an experience of the impact from those. Thirdly, and probably one of the most important elements that you'll witness, is how different risks interact at the balance sheet level. So you may be very familiar with individual risks, market risk, credit risk, liquidity risk, etc. But when they start to interact and you have to consider all of these risks simultaneously, it becomes quite challenging. And finally, you'll be making these decisions over a number of periods, and choices made in one period will have impacts over subsequent periods also, just as it does in real life. And that time dimension is something that comes out very clearly within this simulation type framework. Okay, enough of the blah blah. Let's have a look at the BankWorld simulator itself. Okay, so shortly before the start of the simulation, you'll receive your username and password via email, and that will allow you to log in at the Kinetik BankWorld website. If you forget your password, there's the usual option here. You'll be sent a new one via email. But if you pop in your details there, click login, you'll come to the main screen in BankWorld. If you click on Input Decisions up at the top left there, you'll see the list of decisions that you'll need to make each week. All teams will be making a set of decisions, and then at the end of the week, once all the decisions are in, the model will simulate forward one period and give you all your results and outputs. Now, I'll be discussing some of these decisions in a little bit more detail, but also I should mention at this point that within the LinkedIn group, the BankWorld LinkedIn group within the Chartered Banker area, there is a link to a PDF file there for the player's handbook, and that contains a lot more detail and information on what I can fit into this short video. But basically, you decide on the series of decisions that you wish to make, and then once you've made all your decisions, you then click the button at the bottom to submit, or indeed resubmit, and you can resubmit your decisions as many times as you like up until the deadline for the given round. And when you enter those, you'll see that your decisions will appear down at the bottom of the page there. Okay, so that's your decisions. But what help do you have in order to make those decisions? Well, there's a number of things. First of all, we have some economic data. So for example, here we're showing GDP, HPI, unemployment rate, and the base rate. These will change as you move through the simulation, and it's important to keep an eye on them. Try to decide what is happening in the economy, what stage of the cycle are you in, and what does that imply for your balance sheet and decision making. In addition to the economy, we also have some underlying market data. In this example, we're showing for each credit rating, AAA down to CCC, what is the spread that you'd achieve by lending to that rating class. For example, if you lend some money to a single B borrower, then you could expect to receive base rates plus 6%. That's that blue bar to the right there. and we also show the most recent default experience for that rating bucket. So you need to take this into account when you're making your corporate lending decision. In addition to the economy and the market data, you also have an option to consult the board, right down at the bottom of the list there. If you go here, you'll see that you have a number of members of the board from whom you can ask some advice. So if I click on the economist, for example, then he'll come up with his opinion of where the economy is, what we should do next, etc. And also you get news flashes by clicking on the newspaper there. But I'll let you explore that yourselves. The ultimate goal in BankWorld is to achieve the greatest return on capital. So what this means, first of all, is that you have to have very efficient use of your capital. If you hold too much, you'll be very safe, but will you be able to generate enough return? Of course, you should be thinking, is this the right metric? After all, was it not taking a lot of risk that got us into trouble in the first place in the banking industry? And well, it's not possible in BankWorld just to increase your return on capital by taking a lot more risk, because there are various constraints that you'll be working under. And again, there's more detail of these in the PDF on the LinkedIn group website. But you will be fined if you breach any of the constraints. For example, the regulatory constraints or liquidity rules, etc. So you can't just go taking as much risk as you want, because then you'll get fined, and that will not be very good for you. In terms of the outputs then, we have information on the accounts for each of the teams. For example, here show the income statement, so all the usual suspects, interest margin, default losses, etc. And we also have a balance sheet. Again, quite simplified, but to capture the main risks in a universal type bank. Because you have a full income statement and balance sheet generated at each point in time, you can also generate a number of key ratios, things like return on capital, but also things like capital ratio, return on assets, liquidity ratio, etc. We go into a little bit more detail on a couple of the asset portfolios. For example, mortgages, we show the split by LTV, so loan to value. And this is going to be a major driver of your risk, particularly your default risk, on your mortgage book. And this will change through time based on not just your decisions, but also the economy and how it impacts house prices. In a similar way, for your corporate lending, we have the split by credit rating, and again, you have some control of this through your decisions, but also this will be affected by how the economy is performing. You are in competition here, so you'll be fighting for market share with the other teams. So if you reduce your mortgage rate and offer very attractive price mortgages, you'll probably gain market share, but of course you'll be receiving less income. And that balance between market share, profitability, is something that you'll have to consider and weigh up. BankWorld's an integrated risk model, so we also generate for each team some information on that team's own credit rating. In other words, if you run a very safe bank with a lot of capital, then your credit rating will improve. What does that mean? It means that if you need to borrow money, then you'll be able to do so at lower rates than a team who's taking a lot of risk. So again, it's another way. You can't just increase your risk and expect that to improve everything, because by increasing your risk, your rating will probably decrease, and that will make it more expensive for you to borrow debt. Okay, well, that was a lightning tour around BankWorld, but please do check out the LinkedIn group. In particular, have a look at the Player's Handbook. It contains a lot more detail on what I've discussed today, and also in that group you can post any questions or comments that you may have, and we can answer them directly. Okay, thanks for now, and all the best of luck when running your bank in BankWorld. Bye bye.